The housing market is losing more buyers and sellers every single month that goes by, and honestly, I really can't blame them. With interest rates and inflation still really high, buying and selling conditions aren't really at the best of times at the moment. You see, many people are just simply trying to survive right now with the cost of living continuing to go up, and the idea of buying a house is seeming more of a luxury and a pipe dream than attainable and realistic. What's up, guys? It's James Allen, the Out-of-State Investor, and today we're going to be talking all about the latest reports that came out showing how the housing market continues to get weaker and the future outlook of the housing market just got even gloomier. But before we get started, do me a favor and support the channel by smashing that like button, and if you haven't already done so, definitely subscribe, hit that notification bell to watch more content like this. And with that said, let's jump into it. The housing market is seeing a massive drop take place with transactions on a nationwide level at the moment, and we just got the second worst pending sales report of all time. So before I get into those details, first let me bring you up to speed with where we are as far as homes selling on the market. For starters, we got the November numbers for existing home sales back on December 21st, and the numbers we saw back in that report came back much worse than expected. We saw a drop of over 7.7% on a monthly basis, which took it down from a 4.43 million annual sales rate down to a 4.09 million, which was worse than expectations, which were set at about 4.2 million. Now, to give you some perspective into the big picture of how much we're seeing the activity in the housing market slow down, back in January of 2022, we were seeing an annual sales rate of $6.5 million, and it's been going down very consistently month after month after month, and this is the 10th month in a row that we've seen sales go down. So year over year, we're currently down 35.4% for existing home sales, and that is the weakest sales pace we've seen since November of 2010, except for a quick drop in May at the beginning of the pandemic. Now, that's a pretty sharp decline in home sales that we're seeing right now, but what was really alarming was the report we saw for pending sales. Now, for those who don't know what pending sales are, basically when you go to buy a house, the minute you sign the contract that you are agreeing to buy that house, you are officially under contract in that house, and at that point the home is pending. So these are homes that are due to close in the next month or two from now, and so it gives us great insight into what existing home sales may look like in the coming months ahead. Well, the pending home sales report came back at the second worst levels that have ever been recorded, and so the National Association of Realtors reported that pending home sales were actually down another 4% month over month, taking it down for the pending home sales index from a rating of a 77 to a 73.9. Now, if it wasn't for the very start of the pandemic when everybody freaked out, stopped buying houses, and that was the point when we saw the lowest rating ever, this would be the official lowest rating ever recorded since they started tracking that statistic back in 2001. A quick interruption for today's video sponsor, which is Mashvisor. Mashvisor is a great tool to use whenever you're looking to buy an investment property. Whether you're looking to get a long-term rental property or even a short-term Airbnb investment, Mashvisor provides a state-of-the-art platform which will give you all the data you need in order to analyze potential investments. With Mashvisor, you're going to be able to find the in-depth neighborhood data you need in order to find a property's true potential. You'll get access to everything from investment opportunity scores to cash-on-cash returns to cap rates to rental trends, and on top of that, you also get access to comparables, which will help you not to overpay on your investment property. You can also check on occupancy rates and potential revenue for both short-term and long-term investments in order to gauge your competition, avoid a saturated market, and most importantly, maximize your return on investment. Now, on top of that, Mashvisor covers markets across the United States, and with that, you'll be able to set up unlimited investment property alerts. You'll be able to save potential properties. You'll be able to use heat maps for visual analysis, and on top of that, you'll get access to short-term regulatory data for over 420 cities to make sure your investment properties are in compliance. This is an absolute must for anybody looking to get an investment property, so if that's you, make sure to sign up using the link below in the description and take advantage of this amazing platform. And with that said, let's get back to the video. Now, this was also the 6th straight month that we saw a decline in pending sales take place, and what's crazy is just how fast this has all been happening. You see, on a yearly basis, you can see here that we're at a decline of 37.8% year-over-year declines in pending home sales. But if you look at the regions here, you can see you got Northeast, you got Midwest, the South, and the West. And you'll see that the West is seeing the most significant declines. And a big reason we're seeing that the West is down 45.7%, but yet the Midwest is only down 31.6%, which is still a large number, but it's significantly less than the West because the main culprit of this is affordability. You see, when you're looking at median home prices across the nation, clearly the Midwest is always generally the most affordable areas for homes, whereas the West Coast has significantly higher prices. You got all of California, you got Oregon, you got Seattle in there, and so there's a lot of high-priced homes, making it much more unaffordable. But it's not just an affordability issue that we're seeing these pending home sales decline, because affordability would mostly relate to the buyers in this market, whereas in reality we're seeing a lot of homeowners that really don't want to sell their house as well. And it makes a lot of sense because, for starters, many homeowners are locked into interest rates below 5%. Redfin put out a report that showed that 85% of all homeowners with a mortgage had an interest rate locked in at 5% or below. So that essentially means they're locked into a 2%, 3%, or 4% interest rate. And why are you going to give that up for something of a 6.5%, which is currently where we're at? You could literally be paying double the price for about the same house, whereas if you want to upgrade your house, it's even more than that in many cases. So for sellers, they don't see the advantage of that. They know the market is weak as far as buyer demand is concerned, and so many of them are waiting for a better time to sell. But a lot of the sellers on top of that have these unrealistic expectations. They think they're going to sell their house for what it was worth back in March, April, or May of last year, whereas in reality they're not going to get that price anymore. And so many of them, they sit on the market. We're seeing the days on market continue to get longer. We're at about 40 days on market at this point, and that's because many homeowners have this unrealistic expectation of what they think they're able to sell their house for. And so as they continue to sit on the market longer, many of the homeowners are realizing they're not going to get the price they want, and so they're actually turning to the rental market to rent out their home and wait out for a better time to sell their house. We're actually seeing a lot of evidence of this with Rick Palacios of John Burns Real Estate Consulting. He posted this tweet showing the percentage of home sellers switching their listing to a rental due to higher mortgage rates. And what it does is it compares July of 2022 to November of 2022, and we can see the switch that's taking place with buyers as more of them are starting to gear more towards the rental market. You see, in the Southwest, back in July of 2022, 7% of homeowners were looking at renting their house out, whereas now it's at 17% have switched their listing from the housing market to the rental market. Over here in Florida, there were 4% of home sellers that put their home onto the rental market after not getting what they were hoping for, now up to 15%. Northwest, this was the major surprise here, from 1% in July of 2022, now up to 14% of home sellers switching it to a rental. And so you can see here that across the country, as people are not getting their desired price that they think they can get for their house, they're now moving on to rent out their home on the rental market. So bringing it back to pending sales, we really should expect that based on those numbers that we should expect to see existing home sales continue to go down. I don't believe we've reached the bottom as far as home sales are concerned. And on top of that, when you start to factor in what the Federal Reserve is doing, how they're continuing to stay very aggressive, how they're continuing to hike interest rates at this point and plan to continue to do so well into 2023, I think we can expect that the economy is going to continue to weaken. We're going to continue to see more layoffs take place, and as we enter into this economic crisis, it's only going to further weaken all the buying demand that is even left over at this point. So with that said, what does this really mean for the future of home prices? We see that home sales is going down, but home sales going down doesn't necessarily correlate to home prices going down. However, there are a lot of reasons to expect that home prices will continue to decline. For one, we're already seeing evidence with Redfin giving us weekly data showing us that the most up-to-date information shows us down 10.3% from peak levels. We're still seeing seeing those levels decline on a weekly basis, mostly in part due to the fact that we're still catching up to where interest rates were back in October, back when interest rates were in the 7% range, and we're still seeing the housing market adjust. Now, I do believe that even at 6.5%, there's still room to go down in prices at this point. We're still not done with seeing an adjustment in home prices, especially when you consider the future of the economy and how that will continue to weaken. That will definitely play a huge part in the housing market, especially when you consider all the iBuyers that have overpaid for properties. A lot of these properties they're underwater on, they are liquidating these things, they are lowering prices 2% every 2 weeks, and so with that said, they're trying to offload a lot of inventory that will have an effect on bringing down prices, particularly in areas like Phoenix, like areas that they have huge concentration of homes in. We also talk a lot about the builders. Builders are also freaking out at this point, and they are also trying to liquidate a lot of the homes that they are building. They're lowering their housing starts, they're lowering their permits for future projects, and at this point they see the writing on the wall of what is coming, and so at this point they're just trying to offload what they can and up their incentives. They're trying to slash their prices to get off their books what they currently have, and all of that contributes to lower comparables that will affect the price and the resale value of future existing homes. We're not going to see the worst of this housing market correction at least until midway into 2023. So with that said, I'm going to continue to keep you guys updated with the latest on the housing market. So if you enjoyed today's video and you gained some value from it, do me a favor and support the channel by smashing that like button. And if you haven't already done so, definitely subscribe, hit that notification bell to watch more content like this. Also, let me know your thoughts or questions in the comments below and I'll do my best to get back to you. Finally, follow me on Instagram and TikTok at The Out of State Investor. And if you enjoyed today's video, I'm going to highly recommend checking out one of these two videos over here. And with that said, I'll see you guys on the next one.